Good morning, everybody. Welcome back to the Opportunistic Trader. It's just after 10 a.m. on December 10th, and we're joined by Phil Flynn of the Price Futures Group and Fox Business Contributor. How's it going this morning, Phil?
I am doing great this morning. It's been a very, very volatile day here. It's been crazy, but we just got some breaking news from a secondary source. The Genscape report actually showed supplies at Cushing, Oklahoma actually fell from Tuesday, 420,000 barrels. That comes on the heels of a big drawdown in U.S. inventory. So even though oil looks a little weak today, Michael, we're getting some supportive data that would seem to suggest that oil supplies in the U.S. are going to tighten a bit.
Yeah. Well, you were just talking about it. Right now, crude oil's down 2.25%. We're trading at 51.45, and it seems like it's got a bit of a risk-off tone. Global equities lower. Maybe that's something to do with it. But what's your take here when we're hovering around this low 50s level?
Yeah, I think the market's kind of confused. I think it still seems to have bear market qualities about it. And it really seems to be outside forces that are driving the market. I mean, if I look at the fundamentals, they seem to be getting more bullish. I mean, we saw a report, for example, from China uh, over the weekend that showed that last month they imported more oil than they ever have before. That's the second month in a row that they hit a record. They imported more than 10 million barrels of oil a day. That's like, every barrel of oil that, Saudi Arabia was producing almost, you could have sent it directly to China for imports. And so, the market, though, doesn't seem to be moved by that stuff because they're so concerned about a slowing economic growth. I mean, we were up almost 5% on oil after the OPEC production cut on Friday, and the market was up on the high. The stock market was getting obliterated. Oil was hanging in there for a while, but then we had that comment from the Fed governor from St. Louis, James Bullard, who basically came out and said that he believed that the Fed might not be able to raise rates in December. And it was weird because once he made that comment, the price of oil crashed, and now oil is under a lot of pressure. But, it's kind of crazy because if you look at the OPEC production cuts, you look at the early signs of compliance by Saudi Arabia, where their exports are already down 1 million barrels a day. You would have to suggest that the market seems to be in a wild trading range, really out of whack with the fundamentals, and it may take a little bit of stability in the market to figure out where we're going to be. So.
Yeah, well, I have the chart up right now the past few days, and you're right. On Friday, we had a big rally up to above $54, and over today's low is 51 and a quarter. So,
I got it wrong.
we're still
Yeah.
in that atmosphere right now where they're selling rallies in
45 cycle.
basically everything.
Yeah,
Uh,
I mean, yeah, the mood is really negative, and but sometimes you're just going to have to overcome that negative mood. It does seem like after the Genscape report, we got a little bit of a bounce on the oil, so that could be the bottom for today. We'll see.
hmm. What else are you hearing on the equity side? We've had a volatile move, and right now, as of actually this morning, the low a few weeks ago was 26.03. We traded down to 26.09. We're now negative on the year in all the major indices. What are your thoughts here in what's typically seasonality at a bullish time of year?
I think that this year is different because of the concerns about trade. That has to be the biggest concern and why the markets are out of whack. You also have a Federal Reserve that's in a quiet period now that, the last Fed governor that spoke raised some questions about interest rates. And you got a lot of fear in the marketplace. You're hearing a lot of the doom and gloomers come out of the closet right now, saying we're late cycle in the economic growth story. Things are going to slow in China, things are going to slow in Europe. And this arrest from the Huawei executive raising concerns that the progress that they were making on the Trump trade war with China would fall apart. And so now the thing is that we're dealing with so many if, ands, or buts. We're not, what makes this hard is we're not dealing with real data. We're dealing with a lot of fear if, ands, and buts. And it's almost like there's a disconnect from most of the data when it comes to energy, in particular, and oil production in the U.S., and then it does with the reality of the situation. So when the markets get like that, you just have to be, pick your spots, be very careful, and don't trade the fundamentals. I mean, you got to trade the mood of the market, and the mood's been negative overall. So you can't be surprised, when the market doesn't do what it's supposed to do, when it's really running on emotions and not logic.
Yeah, absolutely. Any specific sectors that you're hearing people talking about that people are looking for interesting activity, whether it be to the upside or downside in the equity market?
Utilities has been one of the best areas, and it seems like in times of turmoil, that's the place you want to be. And people don't realize utilities have a tendency to really perform when the market's doing good or when it's doing bad. So some of the utility spaces could be a place for safe haven on the stock side. The energy space should be doing very well. Now, you wouldn't know it by the price of oil where it is today and the mood for today. But the bottom line is that we keep talking about the U.S. energy producers. We're going to need a lot of capacity as far as pipeline production, oil services to get the market going. So, our belief is that energy still is a very good bet here. Now, I think energy's performed a lot better. It's lagged most of the market earlier on the run up. So energy still, I think, has some really good value down in this area.
Are there certain sectors within energy that should perform better? Like, for instance, natural gas, we've seen prices move higher there, whereas, crude oils move lower, RBOB lower. Is it something with producers, suppliers, certain, any sort of companies or sectors that you think should outperform?
Pipeline companies should do very well. Management, you would like to say oil service companies, but I'm a little concerned that service companies are going to struggle just a little bit because of the pullback of oil near $50. We already saw, for example, the U.S. rig count fall dramatically last week, partly, in response to the break in prices that we've seen in recent weeks. So we might see a bit of a slowdown, and that may hurt some of the oil service companies. So I guess stick with the hard infrastructure stocks, the hard pipeline companies, stay away from oil services, until the market bottoms out.
I'm just writing that down. Keeping an eye on that. Yeah, because it seems like there is a lot going on in the energy land. It's a very active space right now, especially with all the volatility. And then we've got an interesting time coming up, I guess. So now that we're done with this OPEC, we were waiting for this news for so long. What's the take on how everybody's going to be working together? I guess over the next, when is the next meeting, and what's the next big catalyst, I guess?
Yeah, I think we're going to see, like we saw before in the last meeting, record compliance. They have no reason at this point to cheat because Saudi Arabia and Russia are doing the bulk of the heavy lifting. So I would expect to see that you'll see very strong compliance to the production cuts. And in fact, I wouldn't be surprised that they overcomply like they did before, because I think they really want to reduce inventories and stabilize prices. I believe the next OPEC meeting's in about 3 months, closer to March. And I think by March, if the economy isn't as bad as it looks today, if it's a little bit stronger, which we think it is, we think they're going to have to reverse the production cuts come March. So we expect as we get through the next couple of months that this market, should really stabilize. And, I know the market action looks terrible here on a Monday, and there's still a lot of concern in the marketplace, but we really don't think that there's too much more downside. And if you're worried about downside, buy yourself some puts, but we really think that the market's going to be fundamentally undersupplied in the coming months. And, we keep hearing people talk about a glut. We don't have a glut of oil. I mean, we had a glut of oil, back in 15 and 16, but we don't now. And, unless the economy, really takes a severe, drop in the next couple of months, the market's going to be undersupplied. we keep hearing China next year. Well, the headline was, China imported a record amount, but wait till next year. Maybe next year it isn't going to be good. I could have found that headline a year ago.
Exactly.
China imported a record amount of oil, but you better watch out. They're getting ready to slow again. And yeah, so I take those headlines with a grain of salt. I think over the long run, the data is going to win. And I think that if you see the inventory start to draw like you did in Cushing today, and you'll probably see this week, I think that'll be enough evidence to get the market on the right track.
Interesting. What are other guys in the office talking about? What opportunities are they seeing?
The grain markets, they were excited. The big talk on the corn market. Mexico made a major purchase of corn overnight. So it looks like one trade deal is doing good, and a much larger than anticipated. So the grain guys are all excited about that. They're still optimistic because there were some comments from the Chinese that despite all the turmoil of getting out of a trade war, they're still committed to buy U.S. grain, so that should be supportive. So I think the grain traders are getting a little bit more optimistic that maybe we've got a bottom here in place and that the trade war is going to get done. A lot more optimistic than the stock market is right now.
Yeah, we've had a few people talking about being bullish, more specifically corn, more so than soy. But you mentioned that big grain purchase. I see right now March corn is actually down 1 3/4 point here at 343 3/4.
Right.
So not necessarily a bullish short-term bullish catalyst there. That's also the off kind of tone.
I think it's more the risk-off kind of tone. If you're going to have major purchases like that from Mexico and then eventually China back in the market, that should be somewhat supportive for price. Yes, we still have a lot of corn, but they're definitely, if you're going to have those kind of export numbers, it should definitely support the market overall. But yeah, the risk-off today is, like I say, it's not, there's not a lot of fact-based trading today. It's more fear-based trading.
Yeah, absolutely. All right, well, I'll let you run with that. A lot of great information. I appreciate you taking the time to speak with us, and we'll check in with you later in the week.
Terrific, Michael. Have a great one, sir.
All right, and so that's Phil Flynn of the Price Futures Group and Fox Business Contributor.